One thing you and Sequoia are famous for sort of popularizing is the why now and thinking about timing. And so
Yeah.
a lot of people, have their idea, but they're questioning about timing because, to be too early is just as bad as being too late. And so I'm curious for to go through maybe some examples. One that comes to mind, you're just looking at portfolios, Instacart and DoorDash, when Sequoia had famously backed, Webvan a couple decades earlier that didn't work out. I'm curious what gave you the courage to make that bet in a space where there'd been a lot of skeletons prior, and if there are any generalizable lessons from that or other examples on how people should think about timing for whether it's frontier sectors or sectors where companies haven't worked out prior.
I would say that if it's frontier, then by definition, it's a bit too early, and you be in a situation where you might be developing the technology and it needs to be sold as technology or licensed to some other way of commercializing it. If it's coming out of a university, it tends to be a little bit harder for venture investors or founders to have a point of view unless it takes 5 to 10 years to develop the technology. And by the time it's developed, you have a unique proprietary sort of way um, of owning that space. And maybe an example of that would be like lots of investing is gone on into CRISPR and mRNA sort of vaccines, both of which like seems more relevant today than ever before. Uh, but if it wasn't for COVID, I'm not sure mRNA would have been the big deal that it is today. And if it wasn't for some of the sort of gene therapies that we've been able to deliver, I'm not sure CRISPR would be like exploding as much as it has today. Um, but those are pretty unique, and those in those situations you can still sell the company for the technology that it's developed. You don't necessarily have to um, make it into a business quite yet. So you have multiple outs if you're a little early. If you're late, the problem is if you don't have a unique insight, you're just going to get crushed by all the competition around the table. So I'm not sure being too early or too late is the problem. You just need to have a unique point of view on how big of a company you can build and what's its value to someone else. If you're not going to build a sustainable business on sort of the why now question, it's both a question of like how to the founder how much they thought about um, the advantages that they have. So if you don't know that you have all these tailwinds behind you, you're not going to take advantage of it. And so the why now question is like, okay, you have this concept, you have this idea, lots of people have thought of it before. What's going to carry you? What's going to help you? If you haven't thought about it, you're not going to take that advantage. And in in much of venture capital, in much of business, it's about, we obviously are trying to get lucky too, but we were trying to also take as much advantage as is available to us. Um, on the Webvan Instacart example, I would say Webvan, there was way fewer internet penetration then. And the idea of it is not that it doesn't work back then, it worked, but the expansion was probably too fast. It being too early back then wouldn't have killed it. It was, they raised too much money, they built too many distribution centers, and then at some point the music stopped and they couldn't raise any more money, and that's what killed them. I mean, if they had slowly built the business, you could survive a few decades and still be in a really really good place. And one of the advantages that people forget is that some of the best companies in the world are just are very capital efficient relative to their competition. And this is the sort of thing that is hard, right? Like if you're in a hyper competitive space and all of your competition is raising a lot of money, trying to build a business with very little capital is hard. It's you're going to get crushed. They're going to acquire more customers than you. They're going to be able to show more growth. They're going to be able to show more expansion, and you won't have a growth story to tell. So it's a bit of relative game, but the companies that survive and do extremely well are still relative to their competition, much more capital efficient. They do more with less. That doesn't mean that they didn't raise a lot of money themselves. They just did more with less capital. And I would say that about Airbnb. I would say that about DoorDash relative to their competition. That doesn't mean that neither of these companies, they raised billions of dollars before they went public, and they raise billions of dollars after they go public.